Good afternoon and welcome to the end of week market review for October 18th, 2013. You are going to see that we had quite the week in the markets. So to get things started, we're going to take a look at the market news. We just want to see what's been going on and how it's been affecting our U.S. markets. We're then going to look at some economic reports. With this, we'll be able to see what's been going on from an economic standpoint and how it's influencing the markets. We'll be taking a look at some technical analysis for both the S&P 500 and the Toronto Stock Exchange. While we're doing this, we'll be looking at daily charts to identify momentum, and then our weekly charts to identify our trends, our long-term trends, and just see where the markets have been and where we can expect them on a little bit more long-term. Once we've done that for both the S&P 500 and the Toronto Stock Exchange, we'll go ahead and take a look at the volatility indicator for the S&P 500. All right, so we can see that the markets definitely did end the week up in a positive note, with some concern earlier in the week and the weeks prior over the budget deal. They seem to have found a resolution to this, and with that, we've had quite a few good, positive, strong days. Right now, the Dow Jones is up 1.07% from last week's close, while the S&P 500 is up 2.42%. So definitely some good, strong gains in the markets. Now, despite those gains, we are looking at some weakness in our commodities. We have oil down 0.86% from last week. This puts it to $100.86 per barrel. Silver is up 2.81% from last week, putting it to $21.93 per ounce. We've got gold up 3.58%. This puts it to $1,360.30 per ounce. And finally, we have our US Canadian pair down 0.62%. This puts it to 1.0290 pips. All right, looking at some economic reports here, you're going to see that our jobless reports, or the jobless claims, is our most significant thing that we like to look at. On October 17th, we had 358,000 filings, a little bit more than our expected 320,000. So that was a little bit of a stab in the markets, but obviously not enough to make anything turn around. So with that said, we are now looking at some technical analysis for the S&P 500. You're going to see that we're looking at our daily chart. This means each candle represents one day. We had our breakthrough above our cycle high on Thursday, with the continuation of that breakthrough on Friday here. Now, it does mean that we're at some all-time highs and cycle highs. It means that the S&P 500 is definitely overbought. Because we haven't seen the S&P 500 this high in the past, we really have nothing to compare it to. So we need to just be cautious with that. Though the MACD is rising bullish, and with the black line over top of the blue line. All right, looking at the S&P 500 on the weekly chart, you're going to see here that, again, we're at some all-time highs, and it seems like we've bounced off of some support, which was established last week. This was at the 26 EMA. So definitely good, strong gains. You can see that this has been the trend for several months. And as long as we keep going with this, we'll see the S&P 500 continue to work itself up even higher, potentially into the 2000s. As we zoom back even further to about 2004, you're going to see that this trend has been in place for quite a few years. Actually, it's pretty much worked itself up since the catastrophic declines that we had 2008, 2009. All in all, though, definitely strong gains. We need to keep in mind that the markets are overbought because of what we see. Switching gears and going back to the Toronto Stock Exchange, and again at the daily chart. Here you're going to see that we are in a very tight trading range, although it was a rising trading range. We have been in that rut for quite a few days, and we ended up breaking through that overhead resistance on Friday. This now puts us above most of our cycle highs, which means that we are actually looking at some significant highs here. If we can continue to have a trend like this, we're going to have a combination of two things. One, our trends are going to be working themselves up, and two, as this happens, it's going to be easier to get into our all-time 6-month high as these days start to wipe off the chart. Another 2 weeks, 3 weeks, and we will be at our 6-month high. Looking at the TSX on the weekly chart, you're going to see that we've had some strong rises. We really haven't been this high in quite some time. So definitely a great thing to see. All right, taking a look at the volatility indicator, you're going to see that it is currently at 13.04. This puts it very low and down about 17.05% from last week. It's quite interesting to see the amount of decline that we've had and how large it can fluctuate in just 1 week. Obviously, 17% is a significant amount. It does put us at our lower scale when the volatility indicator was at a normal trading range. Obviously, this happened all very quickly. We are going to expect that it is probably going to rise again as the markets pull back. As long as we can keep it below the 200 EMA though, then we're really looking at some good stable market conditions. So with that said, if you have any further questions about anything that we've discussed, you can either send us an email or a phone call to our numbers listed on the screen. This has been the end of week market review for October 18th, 2013. Ciao for now.